Good day, all. Ira Epstein with your metal market wrap-up. And this wrap-up is for Thursday, the 27th of January, 2022. I can't wait for this month to be over. It is just a violent trading month. I know this is metals. Did you watch what happened in natural gas in the lead month on expiration? Up $2. It went up 46% in value because it was expiring. Nobody was at the other side of the trade. Can you imagine being short that? That's why when these contracts expire in futures, you want to be certain you get out in time, and there's a reason your brokerage firms tell you to do so. Staying to the last minute is a professional's game. It should not be the game the public is in. So let's talk about today. GDP number, stellar. Part of that reason, rebuilding of inventories. If you take a look at the stockpiling of inventories, you see how much it contributed. But there's a problem. I just now read a story that the ports of Los Angeles is sitting there again. It's worse than it was. I read about it tonight, how little traffic is now going through it and how the ships are building again. What is wrong with the government? They come in, they do a photo shoot, they clean it up, and then they turn their back and the problem happens again. Fire the whole mess that run the Port of Los Angeles and get people in there that can run it, get these things done. We keep hearing about how good it is. Wait till you read my report tonight and you read the snafus. The positive for the economy, though, is that means that goods aren't making it, and there's going to be a tailwind where people, and I'm talking companies, keep buying goods because they don't have enough inventory on hand. So that is the tailwind. As we rally in these markets, one of the things I've been telling people in a bear market, it's the flip-flop, and so many of the millennials have never seen a bear market. It's the flip-flop of the bull market where the rallies don't hold. And that's what you're seeing in these markets as they keep breaking down. The gold is disappointing. It doesn't hold on the Ukrainian news. It doesn't hold on inflation news. It just paid attention to the dollar, which soared today, and the euro, which completely came apart back into near the 110 area, 111.5 zone. Pretty bad news. Now, we are getting a little bit of a bounce tonight on a lot of things, and you see it across the board. Even the energies are up. You want to switch gears and be in the April crude now. So when we take a look at gold, the pullback came right back to what I call the line in the sand. If you don't know what that is, when I look at a chart, I've learned over the years that chartists like to have a neutral spot on a chart. If I'm looking at a weekly chart, it's going to be the 18-week moving average of closes. If it's a daily, it's the 18-day. If it's a 10-minute chart, 5 minutes, it's the 18 5-minute or 10-minute. Use that as your neutral spot. You're going to be amazed as to what you learn from it. So as the market was over, it pulls back to support, and that's what the market is challenging. The move up here, if you'll remember, we started running out of momentum, and we were talking about it here. You tried an up move, and that was great, and then you immediately gave that move back yesterday, and today the stops caught the rest of the market. So the pattern on the chart, if I take a look, is got a higher high and a lower low. You broke the uptrend. We talked about that last night. You followed through. If we take a look at what you followed through to, one of the things we were talking about as you were starting to come down, this is Wednesday, I said, if you break down, you've got two levels of support. First, you have the 200-day average, then the 18. You got to watch both those. And you can see what the market did, and the market's fighting its battle now at the lowest of them, the 100. And under that's the Bollinger Band. So I don't think you're going to go really far down here. I think you're into a support zone. Problem is you're not in a trend. I think you'll find support at that number as you found resistance at the upper Bollinger Band. In terms of momentum, this trade ended when you lost the embedded reading. Watch. When that happens, the market has lost its momentum, and it's like air coming out of the market. And that's pretty much what happened through there. And now the market is quickly coming down in the red line where it's already oversold. Any reading under 30 is oversold. It's that fast of an event that happened. In the gold-silver ratio, silver couldn't do the job. the key is not to get back over the 18 day average of closes. If you do, it means the bias is up and you need to get more silver to get 1 ounce of gold. In other words, silver's losing to gold. And when we come on this chart, you can see what it did. So here I was looking for the market to find its support at 23.32 to 23.34, the 18-day in red, the 100-day. And instead, the market acted terrible. It didn't even stall at it. That's very, very disappointing. So this will become resistance on a rally back to it, which you might get in the next day or two. But the trend is what now? It's down. You have lower highs, lower lows, momentum is down, bias is down. So the area now of a problem is right here. If you'll recall, I said that if the pros bought this market, the risk was too big to get back to that low, and now you've taken out everything on the chart. The weekly chart you still got to look at because that was ugly too. And sometimes dollar risk is one of the things that keeps you away from just being a robot and you say, well, I like the market there on that technical play. It wasn't right. It's too much money. And I do use money as I teach it in my charting course as to how you learn to work with money management because I filter every trade that I make that isn't embedded with money. And the most I tell traders to risk is $600 a trade on a full-size futures contract. And if it's beyond that, people will say to me, and they're wrong on it, by the way, well, I can trade the minis and it's not that much then if it's bigger. No, no, no. Everything's based off the full-size contract, not the mini contract. In the copper market, it's a market that's drifting every day practically and hitting the 18-day average and caught in this. I would not be surprised if you push the lower or upper band as China goes on its lunar holiday starting on Monday. So for a week, we're going to have them out of the market. Things will get thinner because of that type of trade. It's probably getting thin already as those traders are coming out of the marketplace. In the platinum market, you've been overbought, still overbought, not proving to me that anything's there other than an uptrend, but overbought doesn't attract new money. Now, one of the things that's good, notice how the 18-day average, which was under the 100, crossed over. And it did that today, Thursday, and tonight it's staying like that. If the market pays attention to that, it could very well end up with the market challenging the upper Bollinger Band. Should you take out the low back here, it's this day of $1,003.20, then there's a problem in the market as I see it. Barring that, we'll see. I wish the market weren't that overbought as a technician. In the palladium market, you went up, you're fighting the market right now at the 200-day average and this upper Bollinger Band. Look at how many days up and away. If you don't think that there's some type of squeeze on this, there has to be. Why else is it up every single day? It could be cars, that people are wanting to go with what? Chips. They're getting enough to build more cars. If you watched Apple's earnings today, Apple said, and they sold a heck of a lot of phones, they got their hands on some chips. So is the chip problem getting maybe a little bit better? Could be part of all that. Look at this dollar run off the Fed. Right through the roof. Since the Fed announcement now, we have gone. Do I think it'll stay over the upper Bollinger Band? Read my lips. No. It'll pull back in. Be patient. It'll come back into it now. That to me is a pretty safe bet. Getting ahead of itself, yes, overbought, but clearly in an uptrend, which weighs on commodity prices. Why? So many goods priced in dollar, they're difficult. If we didn't have COVID, can you imagine booking your trip to Europe? Maybe you're going to be at 110 euro. You do realize what a sale price that would be to be visiting those countries. I know my wife and I would want to go. All right, that pretty well covers what I'm seeing there, but we're going to cover this in great detail in our right now. The action's so thick and heavy in everything that you want to read our newsletters. As I said, I don't know how many we put out a day. I'm guessing 70 to 100 between all the reports, oral, written, option reports, futures reports on spreads, what the markets are doing, the special reports then that they put out, the price count reports. I can go on and on. Today we're talking the ruble and putting out special reports on where the ruble might be going. So if you're interested in learning about this and seeing what we send out to our clients, it's yours free for the taking for a short trial. How do you get it? All you need to do is go to our website. You don't even have to talk to anyone. Go there, under free offers on the top left, give it a click. We'll get you on the mailing list, see if you like it. I'm Ira Epstein. You have a good day, and I'll talk to you all tomorrow. Take care.